an index product and being in the market over the last 20 years. So this is just an interactive tool that actually shows what market returns have been on some of these investments and how that compares to the index product that I work with primarily. So you can see here, I'm just starting with $100,000. And this is the different investments techniques and strategies here that we're comparing against. And I've only entered a 1% fee, though typically when you're working with market accounts, you're working with 1.5% to 2% on average. So I've actually lowballed how much the charges are that will come out to manage these accounts. And we'll be comparing to the Dow Jones, the S&P 500, the Nasdaq, and the QQQ. And all of those are going to be compared to a Barclays US Tech index with a booster fee. There is a 3% booster fee you'll see in here, which actually increases how much they share with you of the interest growth. So that raises that interest share to 170%. So if there was 10% growth in that in a given year, it would return 17% because of that booster fee. So, and as you can see, here's the graph that shows each one of these and their growth over the last 20 years. Over here is that input that shows that 20 years. And now we're going to take a look at what the actual returns have been. So here's your Dow Jones, your S&P, your Nasdaq, your QQQ, and your Barclays US Tech in a fixed indexed annuity. So here each of them starts with $100,000. Now for the first few years, you can see that they're all actually outperforming the fixed indexed annuities. So you have about 4 years here. But then we hit a nasty decrease in the market right here, where in 2008, these went down 30 to 42%. Then you take a look over here, and now the indexed annuity is outperforming. And if you look and continue to look on down, you will see that there is not a time in which the fixed index annuity is again lower than the market accounts, because it takes twice the returns to, for example, here where there's 42% decrease, that means there has to be an 84% increase before it gets back to where it actually started. Because you can see that this year it added 53%, and it's still not back to that 125,000 it was the year before with that QQQ. So, and if we continue to look down over these years, you can see what the actual return has been on all of these. The worst that it can ever be on the fixed indexed annuity is to lose the 3% booster fee and nothing more. So while some of these are losing 30, 40, and even 50%, as you'll see later, this never loses more than 3. So as we look down and we get to another major adjustment year down here of 2022, where again, the market took some significant losses, again, this one lost only 3%. So when we get to the end of 20 years, the Dow Jones is worth 322, the S&P is worth 586, the Nasdaq is worth 726, the QQQ is worth 1.2 million, but the indexed annuity that didn't lose anything other than a booster fee for any of those years is now worth over $1.5 million, actually a 1.58. So this is the reason that I believe that we have really good stewardship when we are using something that doesn't lose, because you don't have to have twice the gains to regain it.